Now, a little earlier, I was talking about retirement with the head of the Pru, but there'll be no talk of it with my next guest. In fact, after 31 years at Franklin Templeton, including as executive chairman overseeing $50 billion worth of funds, and at the age of 81, he's just got a new job, but it's still investing in emerging and frontier markets. I speak, of course, of the legendary asset manager, Dr. Mark Mobius, whose new firm, Mobius Capital Partners, will be launching funds soon. So why are you setting up on your own after all this time?
Well, I see a tremendous opportunity to focus on ESG, environmental, governance, social aspects of investing. And of course, we've been confronted with that in emerging markets from the very beginning. And now is an opportunity to break out and do something new and more intense in that area. It's interesting, you know, you were talking about Antofagasta on the program.
Yes.
That was one of our first investments in emerging markets in 1988. It was a way to get into Chile. And it's very interesting the way that it has involved. A good example of a company that did a terrific job in governance. They were very open and they expanded very nicely.
But it's interesting, though, that you're relying on environmental, social and governance issues. I mean, one doesn't often associate that with emerging market stocks.
Exactly. Very often you have real problems in all those issues. And that's the reason why we think there's an opportunity, because there's a growing awareness in emerging markets about this. And in fact, you're seeing governments moving in the right direction. Good example is China. The Chinese government has come out and said, look, to their state-owned enterprises, you've got to improve your governance, you've got to have better disclosure, and therefore, hopefully, increase your profitability.
It's amazing in some ways we're still talking about that, given the very obvious links between poor investment performance and bad corporate governance.
Exactly. And this is where we've learned the hard way. I mean, there are many cases we've lived through in all the years we've been in emerging markets where, you know, bad corporate governance resulted in a real disaster, where the disclosure was not there and we were confronted with real problems.
But presumably you're doing this as well because you've identified a ready need among clients who want to get exposure to these markets, but also want to be seen to be investing in the right things.
Exactly. You see, you have a situation now where there's a growing awareness of the profitability of emerging markets. Emerging market countries are growing at double the rate of the developed countries. And of course, if you look at the performance, particularly recently, I mean, just comparing the FTSE to emerging markets index, FTSE down, emerging markets up by 8 and 9% since the beginning of the year. So there's a tremendous opportunity to have good investment returns. But we also realize that if we want to even improve those returns, we've got to do something about governance and about these other issues.
Well, you mentioned returns. I mean, emerging markets last year returned something like 37%.
Exactly.
I mean, that feels a bit like the top of the market, doesn't it?
No, you're absolutely right. It's something we have to watch very, very carefully. And of course, if you look at the U.S., does look toppy, you know, in terms of valuation, in terms of many, many factors, the market is high. And of course, if the U.S. market crashes, emerging markets will be affected as well. But this effect, by the way, is usually quite temporary.
And of course, we're moving into a rate tightening environment. The Federal Reserve probably going to raise rates 3 times this year. Historically speaking, that hasn't been great for emerging markets either.
Well, you know, interesting. We did some studies on that. We found that, yes, in some cases, higher Fed rates was bad for emerging markets. But there have been other cases where higher Fed rates resulted in a higher performance for emerging markets. So there's no clear predictable distinction, correlation with these factors. So hopefully, you know, this rate rise will be very gradual, which is the way it looks at this stage of the game. And interestingly enough, the US dollar getting weaker and emerging market currencies getting stronger also helps emerging markets' performance in dollar terms.
Now, you've mentioned China as being one market where governance is being strengthened. Where are the other markets that you like the look of right now?
India. India, of course, is a huge market, huge potential growth as well. India is actually growing faster than China now. And the Indian market is now getting much more mature, much more liquid, and a lot of things are happening on the governance arena that is quite good.
Yeah, Mike Wells from Pru was telling me earlier today, 1 million people are going to enter, of working age, are going to enter the workforce every month in Asia over the next few years. I mean, it shows you the stunning opportunities there are.
It's incredible. It's quite incredible.
It's a grueling job, though, yours, going, you know, visiting these markets, wearing out shoe leather. Why are you still doing it at 81?
Well, I love it. I love travel. I love meeting new people, being in new places. In fact, I just returned from Chile, from Santiago, Chile. And again, it was a great experience for me because I see the changes that have taken place over these years. I mean, when we first invested in Antofagasta, I was with the chairman, Mr. Luxic, in the town of Antofagasta, and it was a derelict town. There was a brewery behind us. We were walking in the city, and there was a brewery we noticed behind us that was all derelict. And he said, I'm going to buy that brewery and make it a success. And that's exactly what he did.
And now one of the richest countries in the world, of course.
Exactly.
Got to leave it there, I'm afraid. Mark Mobius, great pleasure to have you on the show. Hope you'll come back again.
Thank you.
For joining me.